In today's market, more homes means more options, more negotiation, and in some cities, price cuts. But before you think the market is crashing, let's look at what's actually happening, where San Diego fits in, and what it means for you if you're a buyer seller heading into the second half of 2025. $56 billion. That's how much international buyers spent in the US real estate market in this past year. And if you're thinking, well, that's probably all going to Florida, you're not wrong, but California was right behind, and San Diego, we're very much on the radar. With tight inventory, steady prices, and growing competition, this isn't a stat to ignore. I'll break down for you where the money's coming from, what kind of homes these buyers are targeting, and how it impacts our local market, whether you're buying, selling, or just trying to hold on to your sanity. All this covered here in this week's San Diego Market Matters, and I'm KarlKyler, your San Diego realtor. Real quick, if you're thinking of selling or buying here in San Diego, I have my contact info in the description below. Feel free to reach out if you want to talk about your options and how I can help you with your next move. Now, let's get into the good stuff. Resi Club reports at the end of June, national inventory was still 11% below 2019 levels. Again, that's national inventory. But more markets are climbing back. Back in January, only 41 of the nation's 200 largest metros had more homes for sale than they did before the pandemic. As of June, that number's up to 78. That's nearly 40% of the major markets back to or beyond pre-pandemic inventory levels. And that's making an impact elsewhere as well. As you probably guessed, it's showing up in prices. 110 of the 300 largest housing markets are now seeing year-over-year home price declines. That's over a third of the country. But here's the bigger picture. 190 markets are still seeing positive growth. And that's a critical detail a lot of headlines and YouTube doomsday channels leave out. San Diego made the list of markets with year-over-year price drop, but the dip is small, only 2.4%. And if you zoom in, our year-to-date price growth is still positive, up 0.6%. So in other words, we're not crashing. We're coasting. You could even say we're teetering, and I'll explain what I mean by that in a second. All of this data makes sense because even with inventory up nationally, San Diego is still one of the tightest markets in the country. We didn't build like crazy. We didn't overheat quite as much as others, though it probably didn't feel that way if you were in the market around late 2020 to mid 2022. So the big question is, what's driving the softness? You probably guessed it, affordability. Buyers are pressed or maxed out, not only on price, but also on monthly payment. And I'm sure this is no surprise to you. And until mortgage rates come down or income rises, that affordability ceiling will continue to cap price growth, not only here, but across the country. This also explains why buyers are getting more leverage, at least for now. Sellers who miss the mark with their pricing are sitting on the market longer. Some are cutting, others are quitting the market altogether. In fact, 50% of sellers who don't get their price are pulling their homes off the market as per Realtor.com. And builders, especially in markets like Texas and Florida, are offering major incentives to keep deals moving. Here in San Diego, though we don't have a lot of new construction, the developments we do have are also offering incentives to both buyers and agents to bring buyers. Now, isn't that an interesting twist? In general, here in San Diego, we're not seeing deep cuts, but we are seeing a shift in momentum. Sellers are negotiating, price improvements are more common. And while it's still competitive in certain price points, buyers have more breathing room than they did a year ago. Now, I want to take a moment and let you know that price cuts, credits, negotiations of any kind are going to be property specific. I came across 3 properties this last week that each had over 5 offers. So there's still a ton of demand out there for a nice home in a great neighborhood that's priced well. And as you can imagine, when you're competing with 5 or more other offers, a buyer's ability to negotiate is going to get thrown out the window. And here's where it gets interesting. Remember when I said a bit ago that the market is teetering? Here's what I meant. If the job markets hold strong, which it kind of is doing right now, and rates do eventually ease, markets like San Diego, where price declines are mild and inventory is still tight, they could bounce back rather quickly. And that's the risk of waiting too long to get into the market. That window might not stay open. Now, mind you, when I say bounce back, I don't mean that prices will skyrocket like they did in 2021, but seeing a return of positive growth, That is very possible. So what does this mean for you? If you're a buyer, this is your moment to explore without the pressure cooker environment we saw back in 2021 or early 2022. And if you're strategic, there are deals to be found. If you're a seller, be real about pricing. Don't chase last year's comps or even early part of this year's comps. That's not today's market. And if your age is not telling you the truth, I will. If you're a homeowner not planning to move, don't get distracted by the short-term noise. Your value hasn't collapsed. You're simply living through the natural tug of war between affordability and demand. That's all. People have been talking about how unaffordable housing is in San Diego since 2012 when the market bottomed out and mortgage rates were 3 to 4%. The back and forth comes and goes. Hang tight long enough and you'll always win. That's the benefit of being in real estate. Now, let's cover the $56 billion investor wave that hit the US over the last year. Here's the headliner. International buyers poured $56 billion into US real estate between April 2024 and March 2025. That's a 31% jump from the previous year. Florida took #1 spot for international purchases, but California climbed to #2, increasing its share from 11% to 15%, largely fueled by Chinese buyers. And while this data doesn't break down by metro, we know how it plays out. When California gets international attention, San Diego gets a piece of it. So who's buying? Majority of California foreign buyers came from Asia and Oceania, about 57%. Followed by Latin America, which is at 18%. That lines up with San Diego trends we've seen for years, especially in markets like University City, La Jolla, and parts of North County, where schools and lifestyle are big draws. So what kind of homes are they buying? Most of these buyers are targeting single family homes, and 60% are purchases for rental, vacation, or both. In fact, Canadians and UK buyers led the pack for vacation homes, while Chinese and Indian buyers often focused on more long-term residential or student housing. It's not only who and what, it's how. How are they paying for this? 47% of foreign buyers are paying with cash. Among the Chinese buyers, 71% cash. UK buyers, 61%. And that's a major factor in competitive markets like ours, where finance buyers are already stretching their budgets and struggling with rate shock. And rates don't mean a thing to these buyers going all cash. And it's not only entry-level homes we're talking about. Chinese buyers had their highest average price tag at $1.2 million. That puts them squarely in the heart of San Diego's mid to upper tier price points, in the entry-level detached market more specifically. So what does this all mean? Let's be clear. Foreign buyers aren't flooding the market, and they're not the reason homes are expensive. But when inventory is low, every buyer matters, and these cash-heavy, high price point purchases can have a ripple effect, especially in neighborhoods where inventory is tight and sellers know they can wait for the right offer. The real takeaway, if you're a local buyer in San Diego, the presence of foreign buyers is one reason to get strategic. It's not solely about price, it's about terms. Cash is king, but flexibility, speed, and clarity can still win. And if you're a seller, understand your buying pool. A sharp pricing and marketing strategy can attract both local and international interest, especially if your home hits the sweet spot: location, condition, and lifestyle value. Bottom line, $56 billion number makes headlines. But here in San Diego, the real story is how the global demand continues to shape our local community for us, the native San Diegans. And that's a wrap. Before you move on to the next video or down the YouTube rabbit hole, be sure to subscribe if you haven't already. And if you got value out of this video, hit the like button as well. I'll have 2 other videos that should pop up in both these corners by now if you are looking for something to watch next or you want to learn more about the San Diego market. As always, I'm KarlKyler, your San Diego realtor. I'll see you next video.